Back in April, when we looked at the Australian dollar, we noted that the price action from the start of the year was very constructive for the Aussie dollar. Aussie was outperforming against a number of its competitors. Our forecast was for further outperformance. Let's now take a look at some of those charts, and I'll show you a technique that I rely a lot on when it comes to analysing trends. The first chart is of Aussie against the US dollar, and you can see that the price action made a decent advance through the month of May. So here in April 29th we had our previous video, and since then price action has advanced in quite an impulsive manner. Using the origin of the advance and the largest correction that has unfolded since Aussie started moving higher. Once price action is contained within the channel, we can favour the uptrend. However, if there is a decisive break of the channel's lower boundary, or we get a daily close below it, one must be careful, as to that would be a warning that at least a pullback is unfolding, or possibly a trend reversal. Once the price action unfolds in a corrective manner, we can keep our focus on higher. However, a 5-wave drop will signal a trend reversal is unfolding. Let's take a look at some examples throughout this advance. So if we get our channel and we establish off the most recent or the initial pullback, you can see price action pushed higher, never broke decisively or closed below the channel as we move higher. We get a break out of the channel and a close below. Price action remains corrective in nature, then we can re-establish the channel. Once the advance rallies to higher highs, we can favour the uptrend is back in track. We then get another break outside the channel. We get this daily close. We must be careful. However, price action remains corrective in nature. We then can re-establish the channel once price action breaks to a higher high. So we've took out the high, and then we end up trading sideways. We close outside the channel again, but also price action here remains corrective in nature. So once we break to a higher high again, we can re-establish our channel, and you can see the price action is pushing higher. The fact that we have pulled back and used the channel as support is a good indication that the advance is using this channel as the guide for higher. So when we do break below it or close below this trend line, that will be a warning that we may have a more significant pullback unfolding. We will be watching price action as it trades along this channel over the coming days, and should we break decisively through it, that will be a warning that Aussie could begin to weaken for a while against the US dollar. Should we break to higher high, I've given you the technique now to re-establish the channel and then look for price action to trade within it once again. Before we go, let's just take a look at our other crosses that we looked at. Here we have Aussie against the yen. Very same technique. We have our channel established. We're watching now to see how price action trades at its lower boundary. Against the Swiss franc, here you can see we've decisively broken through it and closed below it. So that is a warning now that Aussie could remain under pressure against the Swiss franc, using the June 5th peak as resistance. And finally, against the euro, we see price action has broke below the channel's lower boundary. However, this appears to be a 3-wave pullback, indicating that price action may be setting up to push higher, that the trend remains up, because corrective price action is counter trend. We could re-establish our channel here and look for price action now to remain above the channel's lower boundary and continue higher in what appears to be a still unfolding uptrend against the euro. There you have a very simple but powerful channeling technique that can be used to analyze price action or trend. It's a technique like any good technical analysis technique that can be used on any market and on any time frame.